Hey guys, today we have Michael Lombardi here with us. Michael's a longtime investor and he's worked with both Ryan and myself over the past couple of years, buying multiple properties. Michael, tell us a little bit about yourself.
Sure, I am from Toronto, Ontario. I think I own 7 residential real estate properties right now and been working with the Dun real estate team for a few years.
And Michael has a very cool story. He started out buying a triplex in the city of Toronto where he house hacked. So he lived in one unit and rented out 2 other units. We go a little bit more into the details during this episode, and he shares how he got into his first investment property in the city of Brantford and then continued on to the Niagara region. So stay tuned for that. If you're new to our channel, my name is Kogan. I'm a realtor and mortgage broker here in the Niagara region.
My name is Ryan. I am a realtor here in the Niagara region.
And if you're interested in connecting with us, there'll be links in the description where you can book a call with us. All right, let's get into it. So let's get started. So Michael, you've worked with us now for many years now. You've become an accomplished investor. You've done a lot of different projects. Let's kind of go back to your first property you ever purchased. Tell us a little bit more what that was like.
Sure, So my first property, which I wasn't originally thinking was going to be an investment property, kind of became that way, was in Toronto. This is in 2016. I'd been looking for probably 9 months, not just because the market was hot, but because I probably kept changing my criteria on what I wanted. So for a little bit more context, I was probably 4 years out of undergrad, and I guess 3 years out of undergrad, and looking really just for like a condo for myself in the city. Right, had a decent salary, and that seemed like the path that I was supposed to take, type thing. And then as I was searching, I pretty quickly came to the conclusion that I may actually be able to get something that's going to be a little bit more expensive up front, but actually cheaper month over month to own if I can put a unit in it, or buy something that has a rental unit in it.
Sure.
Yeah.
Right, subsidize the income, and I was lucky enough to have support around me. Mainly my folks were quite supportive of that, ran the numbers together. Obviously I'd need to not only have a little bit more down payment, which was great, I was a good saver, but also qualify for something a little bit bigger. Qualification was a very different game in 2016 than it is today.
Was there a stress test back then?
There was not, no. Okay. I think the stress test was 2018?
I think so. It was after the 2017 boom.
Yeah.
Was it?
Yeah. Probably as a result of
Yes, as a result of this 2017 boom. Yeah. Exactly. Yeah.
So I put, over the course of those 9 months, I probably put in 10 to 12 offers at least.
Oh, wow.
Yeah. And mostly I was just beat because the market was really hot. I either didn't go high enough, or I had a restriction, a condition on the offer that the market didn't favor.
Yeah.
And actually the one that I ended up buying, I went in firm, but I had an inspection done beforehand.
Okay.
Which just seemed like cost of doing business at that point. And it's crazy when you talk about this in a market where conditions are normal versus not normal, and that ebb and flow, which we've all been in both sides of.
Yeah.
And ended up getting a place that actually had 3 units.
Wow.
So lived in one, rented the other 2, and that significantly subsidized, although not completely covered, the mortgage and all the expenses.
So that is a crazy story to share in Toronto. You hear of people doing that in smaller, cheaper cities like the Niagara region, but you did this in the city of Toronto. Talk us through the numbers. What was the purchase price?
Sure.
What did those? What was the down payment? How?
Yeah, and I think had I been looking for, so I'll answer the question, but just really quickly, so more important context, had I been looking at it as a house hack, as an intentional strategy to leverage myself for future growth, etc., I probably wouldn't have done it in Toronto.
Okay.
I did it in Toronto because I started looking in Toronto because I'm a native of a suburb and wanted to move closer to work. And there were a whole bunch of personal factors that were the reason why it was in Toronto.
Okay.
Now, those personal factors are also reasons why that's a AAA market, continues to be.
Yeah.
And so the appreciation and the asset security, let's call it, were so high and continue to be so high. So, sorry, to answer your question, basically, we had gone from a tier looking at condos at the time of 600 to 700, maybe 750 for a really nice one, a big one, into the 800 to 900 range for entry-level house in the areas that I was looking at.
Okay.
Which are not nearly what the prices are today, but again, 2016. So I bought for $950 after a bunch of multiple offers, and I think the house was originally listed at like $799 and just went crazy.
Yes.
Which again at the time was wild. But so I bought there, and I think the mortgage payment would have originally been $3,400.
Okay.
3,500, something like that.
Yeah.
Which
that's wild.
Not today's rates.
That's wild in and of itself.
Not
just thinking
today's
that.
rates.
Were you still doing an insured mortgage? Because you obviously were a first time buyer, so you were still doing an insured mortgage with that as well? Okay.
I had to put a little bit more down than I would have needed to otherwise. But again, like the thing that I had going for me, aside from the confidence of potentially being a landlord, which a lot of people in that position don't necessarily have, was I was a super strong saver, lived at home for 4 years before that with a full-time salary. And so like the down payment wasn't necessarily my problem.
Right.
If the property required some work, I think it would have put me out of contention.
Yeah. Like
we painted, I had some friends help like install a couple doors. Like it was nothing serious.
Sure.
Yeah.
But yeah, that was, so yeah, 950-ish.
That's wild though, because you bring that up, but I think that's a really good point. Having those good habits of even saving, staying with your parents maybe a little bit longer than you needed to be able to make that first step, like how much further behind would you be today if say right after college you just rented a nice condo, once you started making money you didn't save as much, right? Maybe when you bought just a condo to live in. Like there's a wild difference, right?
Yeah, and I think I've done that math a few times, and I encourage everybody, if they're in that position, to do the same math and basically figure out, like, irrespective of whether the money is going to like a landlord or mortgage interest rate or some other thing that you'll never get back, determining the opportunity cost of that money. So like I was inherently a good saver. Even if I wasn't a good saver, your cost of living is your biggest cost generally. Your cost of, where you're living is your biggest cost of living, right? So if you can save the vast majority of it through either living with your parents or house hacking and have somebody else subsidizing it, like that's huge. That's way more impactful to your total long-term net worth than like not buying expensive coffee or like doing one of any other things that people talk about doing to save, right?
You save $5 a day from not going to Starbucks versus getting, I don't know how much rent you were getting from the 2 units, but arguably let's say over $2,000 I would think easily. That math.
It's way more impactful than like not going to the movies every week or whatever your thing is that you like doing, right? That's like your fun spending. So it either enables that if you want to keep that, or it continues to crank that lever of long-term network
and
building.
One of the curious things about house hacking that really hit home for me is, even if your mortgage payment, like you said, is like $3,500 and your, say the 2 units bring in $2,000, that remaining $1,500 you may be paying out of pocket is going straight to principal. So like, even though you may pay to live where you're living, you don't lose that.
Totally.
Versus you buy just a condo to live in, the payment may still be $3,000 a month, and of which the majority may be interest, right?
Yeah, totally. Yeah, that's a good point. What percentage of the payment, and with rates changing, obviously now we know what percentage of the payment is interest versus principal, right?
My mortgage used to be 30% going to interest. Now it's 100%.
And not an anomaly in the market, right?
No,
at all.
Not an anomaly at all.
Yeah.
So go ahead.
Yeah, so that was the first property. It took a lot of intentionality to save, and then when you were buying, you looked for a property that had units. After making that purchase, how long did it take you to then get into pure real estate investing?
Sure, yeah. So that would have been 2016. 2.5 years later or so, I think this was in late 2018, I refinanced that property, but I did not pull out any capital. So I refinanced it to get a big HELOC, essentially.
Okay.
Yeah.
So because obviously I'd put down that big down payment, I'd spent the vast majority of my capital, but I needed access to capital if I wanted to do really anything of value. And remember, rates are really good too.
Yes.
So I found out, okay, I could access this capital and not pay $1 until I actually used it. That's great. That's what I need, is the liquidity, essentially, to make any other move.
Sure.
Yep.
Now, I continued to save. Nothing on that side of things changed. So I was still building another reserve. But both of those things combined were very powerful. And that's when I basically had the ability. I was, at this point, I probably started to like, not network yet, but read a lot, and like articles, podcasts were less popular than they are today, but like whatever I could get my hands on to understand a little bit more about real estate. Saw a few investors go into Brantford.
Okay.
And that seemed like a market that, I don't know if these ratios are true today, but essentially the property values were about a quarter what I was used to in Toronto.
Wow.
Or at least in the west end of downtown.
Yeah.
That's where I was. But rents were about half. So that spoke to me, right? I was like, wait a minute, they're offering the same rates there as here, right? Obviously, there are some cash flow implications of this, right?
Yeah.
So it won't be as hard to carry this property. And I think more important context is, at the time, anyone who I knew who had bought in Toronto, which as a 25-year-old wasn't that many people, they were all what we would consider underwater. Like, no one had cash flow.
Yeah.
That wasn't a conversation. It wasn't like, oh, you have 300, I have 600. This other property has 1,000.
So you're negative 300, I'm negative 600.
Right. It was like, what is your cost of carrying? That was the conversation. Minimizing that was like the game, right? And so anyways, like all of a sudden I saw this market that was like potentially positive. And I was like, this is cool. I should at least explore this. So I looked there for less time, probably 6 months. And I'd say the majority of that time was actually like driving around and learning about Brantford, and less actually hunting for properties.
Right.
Because I had a better handle on the specs of the property, but not as good of a handle on the market. Like I grew up in Toronto. I know it quite well, right?
Sure.
I didn't have that in Brantford. And so getting comfortable with that was a big deal. But sorry, to answer your question, it was, I think, November or December of 2018, the tail end of 2018, that I bought a duplex there.
Okay.
Already cut up. The previous owners had done it properly. And so there wasn't much like infrastructure work to do. It was mostly aesthetic.
Okay.
And it was tenanted. So in one of the units. The other unit, I could get in and do pretty small work pretty quickly. The other one, I was like, I may have to wait some time. They were good people. I didn't want to push anyone out. I figured at some point they'll move out. And when it happens, I'll do the work. And before that, I'll do what needs to be done. And luckily, they moved out pretty quickly. I think it was like less than 6 months they were there.
Oh, wow.
Oh, wow. That's...
just literally on their own volition. I think they had a kid who was like going to a school elsewhere and they wanted to move closer or something like that. But so I got in there and I did. And that was my first learning of like, serious renovations often cost way more than you expect them to cost. I was like, oh, aesthetic. Like, no, we're taking up floors and like we're doing some real work. So yeah, that was the first investment property. And I will say after that, and again, because I thought the work was going to cost me, say $20,000, and ended up costing, say, $55,000.
Oh, so not just like a little.
No, significantly more. And that's where that line of credit came in handy.
Sure. Yeah.
Right?
You have access to.
I had access to capital. Had I not had access to capital,
Yeah.
I would have either had to push off the work or find some other way to fund it.
And you knew once you put the money into this property, you were improving this property, right? So.
Right. Well, I know that now. At the time, I was like, I need to do this work, and I want to do it to a quality that I can attract a good tenant.
Right.
And my bar, as well, for a good tenant, was not what the average Brantford investor was, because I was used to a property, the bar was a little bit higher.
Sure.
In the west end of Toronto.
Right? Yeah, absolutely.
So, and maybe I overfinished a little bit, but like, so you lose a little bit on your capital, you still attract better tenants.
Yeah.
It's like a better problem to have, I think.
Yeah.
And so anyways, after that, quite frankly, like months after I finished the renovations, got new tenants, thought, all right, we're good, like we're sailing. An investor friend of mine, again, I'd like begun kind of networking. I knew some folks in this area, was like, dude, you should refinance this place. And literally, I think my question at the time was like, what does that mean? Like I had refinanced before, but it wasn't for the same reason, right? He's like, you should pull capital out. And he's like, you probably forced some more value on this property by doing these renovations. Like, do that. Rates were still the same as they were when I bought the place.
Yeah.
Right? They hadn't gone up, they hadn't gone down. So I did it, and I pulled out my entire renovation budget. Well, no, not budget. The entire amount that I spent on renos. And then some, and a little bit of my down payment.
Nice.
So I was like, that was a huge aha moment. I was like, whoa, I could do this on purpose next time, maybe.
Yeah.
And
So
like, further than that, I could maybe buy a place that this is the goal, right?
Mm-hmm. So it sounds like you did kind of, you became almost like real estate investor by accident throughout this kind of whole process.
Totally.
Was like when you were going through, you obviously mentioned like after you got the first one, which was a triplex, you kind of started like researching or kind of learning a little bit more about that. Was there like anything that kind of spurred you on to do that? Or was it just like kind of just like the natural progression? Oh, I have tenants. Maybe I should like learn a little bit about real estate investing with tenants? Or was there something along the way that kind of, you know, other than just, oh my gosh, I just pulled out a bunch of money from a property, maybe I should actually start investing? Was there something else along the way, or was it just kind of really just kind of taking the next step in front of you?
Well, probably, yeah, it's a really good question. Like, I think there were two major factors. One was all of a sudden I had my capital back.
Yeah.
And I was like, what the heck do I invest in that I get my capital back, right? Like, this is weird, interesting, unique, whatever you want to call it. I was happy about it. And I was like, if I can do this again and it's intentional and not by accident, I can probably do it better than the first time. Because now I can try and like reverse engineer the process.
Right.
Whereas last time I kind of got lucky. And quite frankly, like not only the renovations happened, the market moved in my favor tremendously.
Yeah.
So that contributed for sure. No question about it.
Yeah.
I don't know if the market's going to keep doing that, but like ultimately if I can do this renovation piece, like maybe I can. So I would say one of the two factors was it worked, albeit not on purpose. It worked. I think I can do this again and do it better than the first time. The other big factor, and like not to undervalue having tenants, managing tenants, going through the process of finding good ones, like I've kind of glazed over that. I took for granted because my mom was a career property manager.
Oh,
okay.
And I had never thought, like I'd been intimidated by that, but I always thought it was a surmountable problem. Like I grew up hearing her have conversations with like good tenants, bad tenants, prospects, you know, kind of going through that cycle. I'd never been part of it. It's not like I worked with her.
Right.
But I was just familiar with the conversation.
Yeah.
And when I was doing it myself, I had her help with a ton of it.
Right.
And even
really
when
good.
I took it on myself, I would always go to her for questions about it. Right.
For sure.
Well, this is what they said. What do
Yeah.
you think? We should dig a little deeper.
Yeah.
Or like, that's a really good thing. Or like, you know what I mean? So I had a steady hand,
Did
to say the least.
did your mom or your parents own rental properties as well?
They
Or-
did.
Okay.
They did. And that was a big, I should have said this earlier, but like when I bought my Toronto property, they were for it.
Yeah.
Like they were all for it. Right. And they not only gave me the confidence, but also were like step by step looking with me. They came to, I'd say like 95% of the showings they were at with my agent. I don't know if all the agents love that, but I'm sure you guys experienced that, right? And it definitely steered my criteria too.
For sure.
Right? I probably would have taken some risks on properties that I otherwise didn't, as a direct result of both of them being there. So yeah, they were huge. That was, I would say, the other biggest factor. It was not that like it worked, but also like I had this support, and that support was, I would say, equally or more valuable than having a funder, which like a lot of people do when they're starting to scale.
Yeah.
Right?
Well, I think a lot of people looking to get started in real estate investing who don't have sort of their family or friends in real estate,
Yeah.
what can sometimes happen is the reverse, where they get whispered in the ear, what if you get a tenant that destroys your property? What if?
Yeah.
Because those people have no experience. Yes, those things can happen, but also we know it's not always the case, right? It can be mitigated. But in your case, having family that probably experienced tough things, but also could tell you, hey, do this, avoid these issues,
Right.
probably helped give you some confidence to take action despite the uncertainty. Right?
Totally. Yeah. The horror stories of real estate, whether it's a bad tenant or something else, there's lots of non-bad tenant stories that sort of make headlines in real estate. They're visceral, right? Like you feel them, you hear them. Even if you haven't experienced one, you're like, wow, that's not something I would ever want to go through. And so I think the important part is being able to put it into context of all of the other things. How frequent is it? And what are the things I can do to avoid or minimize it?
Yeah.
It's inevitable if you take enough swings and you play for long enough.
Yeah.
Like,
So
right?
let's talk about that. What's some of the worst tenant stories you have, or construction stories? Like, give us what's the worst case scenario when someone gets started in real estate here?
My first few tenants were all really good. I think that was a big factor of like, A, my mom was helping me vet people.
Yeah.
So like I just got good tenants.
Perfect.
And B, where I started tenanting was a good area, the west end of downtown.
Yeah.
The rents weren't low. Like those are huge factors that
Sure.
I didn't appreciate at the time.
Yeah.
And I think in Brantford, I mostly had pretty good tenants actually. The one that left, I didn't have a deep relationship with because they left so quickly. But in Welland was probably where I had my first difficult tenant.
All right.
They like stopped paying and then started paying, and I always try and get a good sense of like, what's the intention here? Are they like avoiding paying? Is there something I can do to help? Is there something that they don't like about the property that I can fix that will make them be happy and like pay again? Or is it truly like they can't? And like, that's a very different problem to solve.
Yeah.
Very different problem.
Right. And so figuring out which of those two things is, I find anyways, like people may disagree, but easier than you think. It's like a few very deep like conversations with the tenant themselves. And I think this is where, and I have a lot of hired property management at this point, but if you have a direct relationship with your tenant or the property management has a good relationship with them, they can figure out what the actual problem is. Right? And there are other indicators than having conversations. Like you can, I mean, look, they live in a house you own. You can pretty easily tell if they're spending money on other things or not, right? But to be honest with you, like the first tenant that I had that wasn't paying, it was because they didn't want to pay.
Interesting.
And after that, I eventually had one that like went through a divorce. He had just a really, really tough go personally.
Yeah.
And that's so different, right? And also he was showing that he was trying to pay, making partials, being a little bit late. Like you just have, as a human, like so much more empathy for that.
100%.
Right? They're such different situations. Unfortunately, like some landlords treat them the same.
I would say that is probably the biggest mistake, like dealing with a lot of residential investors. That is probably the biggest mistake that I see with investors, and how oftentimes you can get those horror stories, and like that's what stops people from investing in real estate.
Right.
Is they just, okay, they're not paying, they're treating everybody with the same brush, or painting everybody with the same brush, sorry. And it is vastly different, because if you can like, if you have a tenant who's sitting there, they're calling you in advance, they're saying, hey, I'm not gonna be able to make rent payment this month, I just got a divorce, I don't have cash, this and that, and they're giving you quote unquote reasonable explanations, and they're making an effort to try and do it. That's not the same person who's ghosting you, ignoring you, and locking the doors when you come to try and get in, changing the locks on you.
It's a different person.
And if you treat them the same, they're going to end up treating you the same.
Yeah.
But if you treat them differently, you can try and almost like have a little bit of empathy. Like at the end of the day, they're a human, you're a human. There's probably reasons why things are going on.
Yeah.
And it's kind of like anything. Like if you work with somebody, oftentimes they'll try and work with you, and it might not be, you'd rather they just pay your rent on time. You don't have to talk about it.
And it's weird because like you, other than, wanting people to enjoy the property, you do have different incentives, right? And so like acknowledging that and coming to the conclusion with the other person that like, hey, look, here are my expectations at the beginning. Yes, there's our lease agreement, which nails it out in heavy detail and is very specific. But like ultimately what I tell tenants like very candidly is I am happy if you pay on time, pay in full, and don't bother other people in the property, don't create a liability for me. Beyond that, not much will bother me. And you still might break a rule on the lease, but like it won't be a big deal to me, right? Like, and for that, like I'm willing to be flexible on so many fronts, right? And 99% of tenants are great with that. They're so happy with that. Live, let live, like we're all good. And look, there's always going to be like the odd bad apple, but I always try and find, if a tenant comes in and I think they're going to be a good tenant, well, I shouldn't take them if I don't think that. So this should be 100% of my tenants. But if a tenant comes in and they do a few things immediately and show me like some flexibility, I'm like, oh my God, this might be someone I'm going to go to the ends of the earth to keep. I should show them some good faith here. And it's crazy. Almost always there's an opportunity to do so. A lot of landlords miss it. I used to miss it for sure. But like, maybe the holidays are coming up and you can send them a little package. Maybe they ask for like a parking spot and you're like, oh, this $50 like is not that meaningful to me. I'll just give it to them. And they'll be like, whoa, that's different than my previous experience. Or like a little bit of storage space, or like a utility you could take on, or like there's almost always some opportunity. And if you're willing to show the flexibility, usually you get it back. Not always, you can get burned, but like if you get burned, you have to like remember the fact that most people don't like that. I think that's helped me a lot, is just like trying to maintain that good relationship early and often.
I think even just to second that, like sometimes depending on when you're leasing the property out, right? Like if you were leasing a property out in like, 2021 or 2022, you had it took 3 weeks. You had tenants that were just pouring in. You had an overwhelming amount of applications and you were good. And then it's a little bit almost, it can be easier to be a little bit more discerning with what type of tenant that you feel is going to be good and willing to do more.
Totally.
I think lots of times when the market gets a little bit pressed, like early 2023, not a lot of tenants were filling places. It was taking, double what it was 6 months earlier.
Yeah.
And that's when I find it can get a little bit to just start grasping for somebody who you're kind of have a feeling that they're not going to be great.
Yeah.
But you just grab them because you're like, I'm burning $1,000 every month.
Totally.
And
Totally.
Have you ever had to deal with that where it's a little bit harder to find a tenant and then you kind of almost get in this, like, do I just take the money now and maybe forgo these problems down the road? Or
yeah. This was a miss of mine that created quite the learning. I'm glad you brought it up because I think other people do the same. And I always try, I think like most people, especially if you go into a market you're not familiar with, what's the average vacancy rate? How long does it take to find a unit? Like I've asked you guys that very directly a few times, and it changes with the market, obviously. But let's say it's, 5 weeks, 4 weeks, 3 weeks, whatever the number is, right? Even if you get to double that, the question I think is both, do you have the mental capacity to deal with waiting? Assuming you're actually putting in a good effort to finding, separate problem.
Separate problem.
But assuming you're doing all the right things, then if you're in a good enough market, it'll eventually happen. And the other big question that I think is the reason why a lot of people pull the chute early and they're just I'll take the cash. Whoever comes next is probably going to get it. Is they just don't have the funds not to do that.
Yeah.
And when you buy a property, right, that's part of the budgeting.
Absolutely.
Right?
Yeah.
X for the down payment,
Yeah.
Y for the rentals and closing costs. There's another piece.
Yeah.
Right? It's your holding cost. It's what if this place is vacant for 6 months?
Yeah.
Would I die? Could I would I need to sell? Not would I die. Would I need to sell? Would it really or could I hold off for the right tenant? And there were a few instances where I was very close to taking somebody. I think in one case I actually verbally had agreed to take someone. And this was really bad, but gave my mom the entire rundown of the tenant. She wasn't involved in the process at all at this point, but I went to her with the very last case and she was like, well, why didn't you ask this question? And I was like, I don't know, is it important? She's like, I would. She's like, ultimately this is your tenant, but I would definitely ask that question. And I did, and it led us down a path, and I eventually didn't take that tenant.
Yeah.
And I felt really bad, and I apologized to the person, but I think I saved myself a really big liability because they were hiding something.
Yeah.
And so, every one of those instances, if you can save yourself many, many months of potentially non-payment of rent or many months of a liability created, maybe another tenant not liking them because you took the wrong person, it's a risk tolerance thing. I think. And you have to have the capital to wait.
Yeah.
I agree, because when you're in a situation where you have to put a Band-Aid on the problem as opposed to fixing the problem, it almost always gets worse.
Yeah.
Right? And you may intuitively know that, but when you're under the gun and you're feeling the pressure and it's starting to affect your personal life because you're now taking outside of the original budget because you're taking from your actual, living budget to kind of feed the property.
Yep.
Your mind starts playing some tricks on you and you're just how do I get out of this?
How do I stop the bleeding?
Exactly. Exactly. And it's not okay, let's go to the source and actually stop the bleeding. It's let's just throw some stuff on it and hopefully it doesn't seep through kind of thing. Right.
Yeah.
So,
And sometimes you don't know. I've been in positions where it was vacant for 2 months and I was is this just the market being that bad? Is this me not putting in my full effort?
Yeah.
Could I do more showings? Should I hire somebody to help me do this? Am I just not good at this? What is the pain point, right?
Yeah.
And I start putting together the funnel. Are we getting enough leads? Are we getting enough showings? Are we getting enough applications? Where is that not happening at all?
Yeah.
And when I'm talking to other landlords, and this is where data is so valuable, right? What numbers are they seeing? Are mine comparable to that?
Yeah.
Absolutely.
Right? That's the important bit.
I would agree so much. I had a client lease out a couple properties over the holidays. And so there's two people, very similar type properties, and they both wanted to lease them before the holidays because they were new construction or whatever, and they just wanted to get them leased out.
Right.
And, nothing rented over the holidays. What a shocker. But, but it's January 15th. We listed it on December 15th, and they're like, man, it's been a month. Are we not doing anything right? What's going on? And it's guys, it was December 15th to January 15th. Nobody was moving unless they absolutely had to.
Totally.
Right?
Totally.
And
you're
so,
would you? Right?
Yeah, exactly. But if you start to panic in that situation without just kind of, whether it's talking to other investors or talking to a professional in the thing, that hey, tenants don't rent between, that's like, that month doesn't count as a month.
Yeah.
You know what I'm saying? And it's like, let's give it one more month.
Yeah.
Let's see where this is actually going to come. And fortunately, in both cases, the people were calm, they listened, and they waited a month and they got a great tenant, as opposed to just, well, we finally got an application on June 16th or January 16th. Let's take them right now, because we might not get another one for a whole nother month, right? And that's when you can be in, whether it's networking groups or having trusted professionals, like, especially when you're going into a new market, right? Like, that's always, how long it takes to lease in the west end of Toronto versus the east side of Welland is going to be a little bit different.
Totally. Whether the market's hot or cold, right?
Yeah.
A factor is the market, a factor is seasonality, a factor is temperature, quite frankly.
100%.
Yeah, totally. And I think, like, you know, like you said, talking to experienced professionals, I often, especially if I'm new, like if I'm new in this space, so like when I was new in real estate, I would just try and call like 10 others or 5 others or whatever the number was and be like, this is what I'm hearing, is this true? Or without giving them the answer, I'd be like, you know, what's the worst or best time to like lease a property?
Yeah.
And obviously without fail, they're going to be like, oh, no one likes to move at Christmas. And then I'm like, oh, I would hate that too. True. Right. Like it kind of starts to make sense, but yeah.
Awesome. So you got this place in Brantford, and where did we go from there?
We went to Welland.
We went to Welland. So
Yeah,
did you just have the one place in Brantford then?
I do.
Okay.
Yeah. I met a gentleman named Koken.
Okay.
You familiar?
I've heard of him before, once or twice. Yeah.
Yeah.
And he talked you out of Brantford, eh? He's like, you got to come to Welland. It's the place to be.
Well, I think we should give credit to your friend Roshan, who
Correct.
introduced us,
Correct.
who somehow convinced you that on your first visit to Welland, where you see 3 or 4 properties, you're going to buy the very first property you ever see in the city.
So, to be fair to Roshan, he had been pitching me a lot about, because he was there already, right?
Yeah.
He was there before me. He had been pitching me on Welland for a while, and I was kind of still on this Brantford train, and he had a place in Brantford too. So like we were both, our overlap was definitely Brantford, and his like new, you know, precipice was Welland. And so we had been talking about it. He'd been sending me like things about the market. It wasn't that I was unfamiliar with the market in general. It was physically like I'd only been to Welland as a visitor before, never as an investor before.
Yeah.
I like grew up playing a lot of hockey, probably did a lot of tournaments in like
Okay.
Niagara and Welland, and that was my only experience there.
Yeah.
The arena was probably the first place I'd been to.
Yeah. You're playing the little NHL. And
Yeah. Never was I driving by houses being like, ooh, like the reverse now. But yeah, so I would say was it like day 2 or something? Like it was one of the first few days we made the offer.
Yeah.
Right?
Yeah.
We hadn't been looking for very long.
If I remember correctly, I met you once, and you bought the first property that we saw together.
My most efficient purchase.
And it was 5 doors down from Roshan's property.
Yeah,
So maybe
it's right
that gave
around
you
the
some
corner.
comfort.
Yeah. Oh, it did. Like again, like the area, and also as well, I will say like Welland is unique, but there are so many commonalities between Welland and a lot of other Southwestern Ontario markets that like, I'm certainly not saying like if you know one, you know them all, but you can get a feeling once you're there.
Yeah.
And as long as like the demographics match and it has like the, you know, the hospitals, the healthcare facilities, the schools, all the other like fundamentals of a market, which like that part I was already confident in when I went to Welland, when I came to meet you, when I walked around. Like I've had that analysis on other markets and other times, and I wouldn't have even considered driving there. Like not to not visit, but I wouldn't have considered like a realistic investment in that market at the time. So like I don't want to underestimate the amount that I think you should do before you are serious about making an offer. That being said, it was definitely my fastest offer, like seeing a place.
Yeah.
But I don't know. The place was incredible. The situation with that property was really cool.
But it
was a little bit cheaper than Brantford at the time.
It was cheaper, but also you saw a strategy Roshan was pulling off.
Yes.
Right?
Yes.
Which was to add a legal basement apartment, buy sort of like this higher quality bungalow, backsplit or side split type property is the one he bought, right?
Yep.
And then when we saw this property, it was, if I remember correctly, like 1,300 square feet or 1,100 square feet. It was a bigger bungalow, right?
I think it's 1,200.
And I think especially your perspective seeing properties in Toronto, and then you come to a city like Welland, you're
It's
like,
different.
I can get this much land, this big of a house, right?
It was price per square foot was obviously a massive difference.
Yeah.
But one of the comparison points, and again, like when I went to Brantford, it was like a quarter the price, half the rent. Like there's a good ratio here.
Yeah.
Brantford to Welland, I don't think this is actually true today, but at the time it was like slightly lower price point per square foot, not a huge amount, but slightly lower, and rents were about the same.
Yep.
They seem the same.
Yeah.
So I was like, great, we can like exacerbate this more, and there may be an opportunity because Welland was a little bit looser on guidelines and restrictions.
Yeah.
They were trying to like really spur the development,
That's right,
to do that basement suite.
Yeah.
The basement suite seemed like a natural progression of this burr.
Mm.
Not that I was an expert at the burr at the time, but like it was like, well, again, how do I do this intentionally this time?
Yeah.
Oh, an entire suite will be helpful to the two groups who who matter most in this equation: the renters and the appraisers/lenders.
Yeah.
Kind of the same group, right? Am I going to get some of this capital back, maybe all of it back, and can I rent it and carry the property without my intervention afterwards?
Yeah.
Those are the two big pain points, right? Both on the burr at a lower level and at this. This is just like a burr on steroids.
Yeah.
That's how I saw
Yeah.
it,
Mm-hmm.
right? And you probably remember we toiled around with the design of the basement for a while because it had that massive load-bearing wall down the middle of it,
That's right. Yeah.
right?
That is one of the biggest 2-bedroom suites. Is it 2 bathrooms or the 1 bathroom?
One
And a half?
No, one.
One in the basement, right? Yeah.
The one upstairs is massive.
But even the one in the basement was pretty huge, right?
Yeah.
Like,
Square footage wise,
Yeah.
it was still actually we added a piece to it because there was so much space.
yeah.
But
I think
yeah, it was a big,
the unique thing about that basement, if I remember, you have a boiler heating system. So because of that, you have no ductwork in the basement. So full sound separation, right? Fire separation, good ceiling height.
yeah.
Even
the upside of no ducts, which you taught me, I think. Actually. Yeah.
did you end up doing something on the AC, like AC for the upper unit or
Yeah,
something?
we actually redid. This was a horrible expense, but like needed to happen. We redid the entire AC unit in the whole property.
Did you put forced air in?
No, it had this weird system which we did a version of in the attic.
In
Remember
the
that?
attic,
The
yeah.
octopus.
Okay.
Yeah.
Yes.
Exactly. And the old one was causing a lot of like, to be honest, like what originally spurred the thought to do this was we were getting condensation problems from it,
Okay.
and it was like making things wet, which obviously like water is your biggest enemy, right?
Water and real estate, not
Not good. Not good in the wrong spots.
Yeah.
So yeah, we ended up having to redo that, but the place is operating well right now. Tenants are good. So that was my first like conversion, cost overrun learning. Probably like 15% more than I thought.
So better than 115%.
Way
more.
better.
Okay,
Way
that's
better. We're going in the right direction. In terms of overruns, we were trending in the right direction.
Man.
But the total was more too, and so like I had to account. Like if we went 125% over, like
You were
a huge problem.
big trouble.
Yeah. Yeah.
Oh, man.
And that's also where a really good, not just competent, but also investor focused, I would say the entire power team. I think the two biggest members in terms of looking for investment type properties are definitely your realtor, right?
Mm-hmm.
And your inspector.
Yeah.
Those are my two biggest, right? Like you know this, and we're not at that property yet, but like the triplex in Welland later,
Yeah.
it was Ryan, and then I think to ideate, and then my inspector to like validate that
Yeah.
we could put another unit in a property.
Yeah,
Right?
that was a super cool property.
That was the one where you blew up the attic?
Yeah,
Okay.
we put
That was a cool project.
We put a dormer on the front of the house. Yeah.
That was also one where I think we sent in the notice of fulfillment with about 2 minutes to spare.
I forgot about that.
Oh.
Because we see this property, which we think is like a good duplex conversion,
Yeah.
right? And we're going through and we're like, okay, this is a cool duplex. All of a sudden, when we're in this property, I don't know if it was me or the inspector, but it was like,
I think it was you.
okay, it was like, hey, like maybe we could do 3 units in here.
Yeah.
Because at this time, like Welland was probably one of the only cities that was allowing this, but you could do 3 units in a regular residential zone.
Yeah.
And so we're finding some problems with this property. Like they took out a wall, they didn't really structure it properly. So
Yeah.
we were finding some like things that
Big learning.
this duplex was going to cost way more than we thought when we were going to buy it.
And it may not have been worth it as a duplex.
I don't think
It's
it
like on
would
the
have been.
line.
Yeah, it was kind of on the line. It was like, okay, we need to get a big discount on the
Yeah.
after the inspection to make this worthwhile.
Yeah.
However, when we were in the inspection, all these bad things we found, it was also like, wait a second,
There's an upside.
we can actually do this to it.
Yeah.
And so I remember we went back to the people saying like, hey, you guys removed the wall, you didn't structure it properly, like this isn't right. We want a discount to remedy the mistake that you guys made.
Yeah.
And I remember talking with the other agent, and he was like adamant that we weren't getting anything. He was going to take this property off the market. I think it was in like November maybe. He's like, I'm taking it off. I do this all the time. We're going to relist in the spring. I'm going to get 20 grand more than you guys are offering me. We're not giving you any discount. And that was like their thought process.
Yeah.
And I remember...
We also didn't see what was coming with the market.
Would have really worked out well in their favor, but yeah. And yeah, so then we sent it, I think, amendment with an irrevocable of like 5 p.m. But we had, I think, until 8 p.m. to firm up. They just completely ignored our amendment. They were like, we're relisting this, it's fine. And then you were just like, well, you know what? When I run my numbers as a triplex, I think this is actually going to work.
Yeah, we're going to do it.
And I remember I was actually curling that night, waiting for you to sign, waiting for you to sign this notice of fulfillment. And I'm like looking at the clock, like, dude, if he doesn't get this to me in like a minute, we're going to lose it. And the realtor doesn't want to sell the property anymore.
Yeah.
And then you signed it, I sent it off.
Yeah.
And I remember even after we sent it off,
I was just pacing in my room, having conversations and like, oh man, that was fun.
And then I remember even after we sent it off, he argued with us, saying that, no, you can't buy the property.
Yeah.
And long story short, we followed, we were within the timelines and everything like that. And you ended up buying the property. And is that going good for you now? Like,
yeah, it is. And that was another, I try and like pick up these learnings, whether you're successful or not, like being specific in your clause, time, date, time, right? Like that's what helped us.
Yes.
We didn't have that, like we may have lost that battle.
Yeah.
And so, that property's going well. The cost overrun actually wasn't that bad on that because we were accounting for the let's call it like shoddy work.
Yeah.
Previous, right? Basically what they had done is they had opened up the main floor and they didn't properly support it below. Thankfully they had done it very recently. It hadn't been that long.
Okay.
And so we could just get in and like do it properly in the basement. Got an architect out, got an engineer out. It wasn't an expensive process to do, but again, to Ryan's point, like if it was a duplex, it may not have been worth doing all that because it was a triplex.
It's a big project. Right?
It became worth it.
I remember when I went to that property after you had completed it, you actually separated the water meters on that. Like you had sub water meters, if I'm...
Honestly, like the difference in cost between the solution to separate versus not was shockingly low.
Okay, well.
So either I was being overquoted on the other option or not, but I was like, yeah, let's do it. And like now we have the ability to, in an ideal world, you separate everything, but it's cost prohibitive, right?
Yeah.
So
is there one water bill or are there 3 water bills on that property?
No, there's one water bill, but you have the ability to...
You can kind of see usage or something.
Yeah.
Okay.
Yeah. And they're all they're all 2 bedrooms.
Yeah. That was a very unique part. It's almost like a purpose-built triplex where you don't have huge units, you don't have tiny units. Each has 2 bedrooms, right?
Well, we added a lot of square footage.
Yeah.
Yeah.
Right? And because of the 1.5 that it was before, you had a lot of square footage that was just kind of wasted, right? It was like behind the walls at like 4 feet.
Yeah.
If we could get height, all of a sudden, right? It was, I want to say that unit upstairs is like 700 square feet-ish.
That sounds right to me.
Yeah.
750, I don't know, somewhere around there. So it was all of a sudden viable, right? That one was a good one. It wasn't that long ago either, but
No.
Yeah. What stood out to me about that deal is you bought it at one of the most expensive times, if I'm not mistaken.
Yeah,
right?
It was probably about 6 months before.
I think it was just before things peaked.
Yeah. But even paying those prices based on you doing your numbers and the strategy, like the value you were adding, you are generating enough income to make that deal make sense. Because I know a lot of people who bought around that time, if they overpaid, they didn't have the right strategy to make enough income on the deal, they're in a pretty tough spot, right?
Yeah.
Especially with the rising rates. But I remember I remember having a conversation with you about this maybe a year after, right? As rates were rising, and you were saying, I'm not making as much cash flow as I was expecting, but I'm still like well in the green, at least at that time. Yeah. Right. So.
Yeah, I think like this goes back to, there's a whole bunch of different directions we can go here, but like when we were making offers, I remember Ryan and I had like a long late night conversation about like when prices were just skyrocketing so fast.
Yeah. It was like every week.
It was crazy. I remember where I was standing when we were talking about this, but like every week there were like new highs, and I was like, this is nice on paper for the properties that I own, obviously horrible as a buyer trying to get in, but like ultimately this is bad because it's not sustainable.
100%.
Right? Like it's bad for the overall macro of the business, right? And so we were still putting in offers at the time. I was still in buy mode. We were just getting destroyed on some of them. And like,
Yes,
kudos to Ryan for like his patience here. I might have run away, but like, I think you knew I was still serious.
Yeah.
Like we done enough business.
You bought enough. If you were my first time,
Yeah,
maybe
yeah.
it would have been tough. But
yeah, but we put in a lot of offers. We got, destroyed. We lost by 50, 100,000. And quite frankly, in hindsight, today at least, like those buyers maybe have a little bit of remorse for that price. But I think like that was credit to everyone prior who had told me like run your numbers and stick to them.
Yes.
Everyone runs their numbers. Some run it better than others, but like and stick to them is the hard part. Not running them. The math actually isn't that complicated.
No, it's addition,
sticking to
multiplication, and
Right.
it's very simple.
It is. And when you're putting in offers and you're in the situation where like, oh, there's another one, and like we have a blind system here too, so it makes it even harder as a buyer, right? Quite frankly, like if someone comes in 50 over, it feels like monopoly money in the moment. It's like, well, I could get it if I go in at that point. Would I have made that decision before knowing about this property on paper with my numbers? No. But like now it's live, things are real,
Yeah.
the excitement's here.
Yeah.
I
And
put in
you-
all this time and effort and energy looking at the property and hiring an inspector and
Yeah.
your time, right? Like,
And you lost out 5 or 6 times before, so
Yes.
you're really like, oh, do I want to lose again?
Huge.
Like,
yeah, there's a mental aspect to it that shouldn't be understated. But I mean, yeah, we lost 10 times at least.
I think it was. I think it was the 10th or the 11th.
It was the 10th, yeah.
It was double digits for sure when we finally got it.
Yeah,
So
yeah. But I think worthwhile.
Yeah.
I think in the long term, I think we'll be proven right.
No,
No, absolutely. I think already we're like seeing the results on that deal compared to like even I'm trying to think. Of properties purchased around that time.
because that was 2021, right? Like November
Yeah.
2021.
Yeah, that sounds right. Right before, it was like a few months before
Well, February 2022 was the
was
peak.
when. Yeah. Okay, so it was, November or October or something. Right.
Yeah.
It was getting cold. I remember that.
Yes.
So,
Yeah.
whatever that was.
Yeah. Yes, it was.
Correct.
Yeah,
there
I
were
can
a few that went
I can think of a lot of properties because I can think of properties that were sold and bought by investors, not necessarily ones that we bought and sold, but like at that time it seemed like I remember talking about this with you. There was like a separate market for bungalows that could be duplexed. It was
Yeah.
like if you had a bungalow,
It was like an independent.
it was like an independent.
class.
Yeah, it's like wasn't like 1,000 square foot, 1,100 square foot bungalows. It was like 1,100 square foot bungalow that can be duplexed
Yeah.
as a like there's a big premium
Yeah.
on that property.
Well, because the cost of capital was low, right? And most of the people aren't coming at this with cash only.
No,
So the cost of capital, if everyone was operating with unlimited cash, the difference in the market wouldn't be that big, right?
Yeah.
But what you're also doing though is the more you pay for a property, the more you're exposing yourself that the cost to hold it is going to be harder.
yeah,
And unfortunately, like that's what was exposed and that's what happened. Right? Now there's no way to ever know if it's going to happen or when it's going to happen or by how much.
yeah,
But the more cash you can bring to the table, the more you're hedging against that problem.
Yeah.
absolutely.
Right? It's not easy to do.
No, because I remember like not long after that, I remember there was 2 duplexes in St. Catharines that sold for over $1 million,
Oh yeah,
and that was like
mind blowing.
that was like literally mind blowing to us. We were like, what? Like, how are people justifying the rental numbers on this? Because like
Yeah.
I'm running the same numbers that I think they're running, and like the math just it isn't adding up. But
People get
The math
excited.
isn't adding up at a 1.5% interest rate.
Yeah.
imagine owning that $1 million duplex at
Yeah.
a 6.5% interest rate.
Yeah. And that's why my numbers ended up like the max purchase price always ended up coming in so much lower than so many others was because I would run it. I think my stable was like literally in my Excel formula. It was like current market rate, which I would plug into, but then the number that was used for the mortgage was always 2% higher,
Okay.
right? Which was a bit of a hedge. It ended up going higher than that, so it wasn't the best hedge.
Yeah.
But
But that was the
definitely
stress
helpful.
test. That's what the bank's using to qualify you. So
Yeah.
I think that.
No, but that's what I used to calculate cash flow, like month over month.
Yeah.
Right. So if I were to bring in an investor or just speak to myself in the mirror, it was like, we're going to be missing that amount of cash flow.
Yeah.
And if I'm okay with that difference, we can make an offer at this price. And if I'm not, sorry, Ryan, let's go look at another one.
Yeah.
Yeah.
Like,
Yeah.
and we did. And we did.
And we did. Again and again.
I think to your point though, putting offers on 10 properties is tough, but I think you coming to Ryan with the experience of having purchased investment properties before, you weren't necessarily wasting Ryan's time with like, I want to see all these properties and like you were very efficient.
The
right?
goal was to buy one. It's not like we were playing.
And it also wasn't like what
right?
it sounds like you were doing when you bought your first property, where you said you saw however many
Changing my criteria
changing your criteria every week,
no.
like because that's
We were getting more specific a little bit. Like we would find something in a property and be like, oh, I didn't realize how bad this was. In future, we shouldn't look at properties that have like I don't know, structural issues,
Right.
Because a structural issue requires a cost that I don't have the capital for.
Right.
So like as soon as we see that, we don't talk about that property.
Yeah.
So I think that's okay. Is getting more narrow.
Yeah,
for sure.
Obviously, the extreme of that is getting so narrow that
nothing fits.
Exactly, nothing fits.
There's
a
I remember
there's a window there.
I remember speaking to an investor once. He came to me with a very specific criteria. I was trying to find property after property. I would send them to him, and then finally, I was getting frustrated. I was like, why are the properties that my other investors are buying, none of them seem to fit you, right? So I literally asked him, have you seen any property in Ontario that fits your criteria? He's like, no, so far only in Nova Scotia. I'm like, that may be why this is not working.
Was his criteria? It had to be in Nova Scotia.
Just like
I
crazy.
mean, East Coast property in Ontario.
Yeah. Anyways, that was funny. But
Yeah. So